Both companies do a little over $100 billion in annual sales. Both companies are declining year-over-year revenue. There just isn't enough oxygen at that stratosphere, if you will, to sustain tech revenue growth. So what IBM has done over the past 10 years is focused on software and services. That represents 80% of their revenue. While HP, half of their revenues comes from PC and printing. The other half is enterprise solutions. And so IBM sold its printing group. They sold their PC group. HP's yet to do that. And I think that's probably the last remaining catalyst for the stock in our view. And if we think of some of the parts analysis, might yield $30. So again, not that much upside relative to the run that we've had so far.
Yeah, PC sales are declining. Everyone seems to be going to mobile. Hey, listening to all this, Mr. Keene in Chicago, what's your trade here?
Yeah, as I look at HPQ, it has risen very fastly. It's gone from $11.50 to almost $26. It's up 80% this year. As Brian talked about, revenue growth is going to be very, very weak year over year.
You're a dork.
Historically, the stock has sold off 5 of the last 8
What are you
quarters.
doing?
I just want to take a risk versus reward setup. The chart is very, very hard to fight. So if I'm taking a trade, I want to make sure I get a good risk to reward setup. So I'm looking to buy the 24-23 bear put spread. I can do this for about 30 cents. On this trade, I'm risking $30 per one lot. I can make 70. So I'm getting basically a 2.5 to 1 reward to risk setup. The option market is implying a 10% move in HPQ by Friday. So we're looking at about $2.50 move between now and Friday. Measured move targets to 23. I can think it can sell off to 23. Probably will find buyers down there.
Yeah, in other words, okay, you're betting 30 cents to potentially make, in effect, 70 cents. Brian, as you listen to Andrew's trade, how does that strike you, playing the earnings, in effect, from the negative side?
Well, I think, if I had to choose one way or the other heading into the print, I think there's another opportunity for you to short the stock into the print. I think it's going to go down in the near term based off the expectations. The setup, in our view, is skewed to the upside. So I think that basically exacerbates the risk to the downside in the short term. Again, long term, we think that they need to change the fundamentals and change the strategy of the company. We don't see revenue growth coming anytime soon.
Do you think that consensus estimates $3.60 for this year are too high?
I don't think so. I think ultimately they're going to beat the 86 cents that people expect this quarter. Street basically expects $1 next quarter, so I think things will migrate.